Hey everyone, this is Justin Nichols, Chief Investment Strategist for JPN Investments LLC. This is your weekly market update, and for those of you that are new to the weekly market update, it is a powerful little 5-minute presentation. We talk about the just recently finished week's economic data that's been released. We do a quick chart review, and we go over our guidance for the month, any changes to it, or if we hold. And as you can see, this is for December 19th through the 23rd, this past week. As you can see here, the large, mid, and small cap indexes within the U.S. equities realm, I'd say emerging markets and foreign are still getting hurt, still trading at lows, possibly breaking lower. One thing I thought was interesting here is the large caps outperformed the mid and the smalls. So that's interesting, especially since that mid index there, the S&P 400, has less stocks in it, which you would think would have higher returns, but it didn't. The leaders of the week as far as a sector standpoint, remember there's basically between 9 and 11, depends on how you look at it, broad sectors for the market. Energy was great this week, financials were great, and industrials. One thing I'll say on each, energy's been a dog for me all year in my fund that I trade, my private fund, and I'm still expecting a rally next year, and I've always been a big believer in energy, but financials, I would say if you've got a 10 to 15 year time horizon, you can't get better bargains right now than some good quality financials with a healthy balance sheet that are trading at a discount, like a price to earnings growth ratio under 1. I think that's a powerful sector to play for the long haul. Industrials have been great for me this year. The superstar for me in that sector is Kansas City Southern. My fund probably got about 20% returns on that one this year. That's after taxes and commissions and everything. So good sector. Some economic reports that were great this week was the housing starts beat expectations, economist and market expectations. Got the building permits came in higher. Michigan sentiment came in almost 2 full points higher, from a 68 to almost a 70, 69.9. Quick chart review here. This is still, believe it or not, with the recent rally of the week. That's this week's rally, and that was the previous week's pullback. This is still, if you're a chartist or a trader, this is still a neutral pattern, and we are still neutral on December, not just because of this chart, but because there's still a lot of things going on in the markets globally. The U.S. markets have been reacting heavily based on European information. Anyway, the S&P 500 here is looking to break out of this neutral pattern, and a new pattern will emerge. So we very well could see a rally all through next week. Things to watch out for, though, you always want to manage your downside. Keep an eye on the Dow Industrials chart. The Dow should not be ignored, although it's a smaller index. It's a big index, but people tend to pay far more attention to the S&P than that. Anyway, it's showing a possible double top, and those are usually really bad because they just end in heavy selling pressure. That coupled with institutional selling the last week of the year, to be expected. Fund managers still like to do some window dressing, sell off their losers, take those capital losses to clean up their returns. Watch the S&P 500 at the 1300 level, whether that gets there next week or the week after. We're expecting heavy selling pressure there. That was where the major support was cracked recently in the correction. Pleased to announce that next month is going to be our 2012 Business and Finance Summit. If you got an invitation to it, great. We're looking forward to having you, and hopefully you can make it. If you got any questions, check us out on the blog. We got market updates, free trades, free strategy, and video posts. And as always, the market update is free as well. Give us a call sometime if you got any questions, alright? As always, trade wisely, and happy holidays.